Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories behind those dusty corporate filings. Today, we're diving into the Philotimo Focus Growth and Income Fund's latest report, and let me tell you, there are some eye-opening numbers in here, especially when you look past the fancy jargon. So, what exactly is the Philotimo Focus Growth and Income Fund? Think of it as a money manager's playbook, showing you where your money has been and how it's been managed for the 6 months leading up to the 30th of September 2025. It's like getting a report card for your investments, and we're here to grade it. First off, let's talk about costs. For every $10,000 invested, the report says you would have paid about $83 on the surface. That might seem small, but this represents a 1.50% cost, and that's something to keep an eye on. Over time, these seemingly small percentages can really eat into your returns, especially if the fund isn't performing exceptionally well. Now, for the fun part, where did the money go? The fund has spread its investments across various sectors. Communication services, consumer discretionary entertainment, and consumer discretionary retail are some of the areas. They also have significant chunks in information technology and a decent slice in real estate. It's a diversified approach, but it is always interesting to see which sectors are getting the most love. Information technology makes up about 22.93% of the fund, while consumer discretionary retail is a hefty 31.47%. And who are the big players in this fund? The top 10 holdings give us a clearer picture. The Real Incorporated is at the top with 11.92%. Then you have Allot Limited, Barnes and Noble Education Incorporated, and Inspired Entertainment Incorporated. These top holdings reveal where the fund managers are placing their biggest bets. It's not just a few big names, but a scattering of companies, some with significant percentages. As of the 30th of September 2025, the fund's total net assets are a little over $116 million. That's a substantial amount of money. The number of holdings is around 42, and the portfolio turnover rate is 39.05%. A higher turnover rate can sometimes mean more trading activity, which can lead to higher transaction costs. Let's dig into the actual investments. This is where the rubber meets the road. The fund holds a significant portion in common stocks, totaling 81.44%. Within that, you see specific companies. For example, in the communication services sector, Therese Marchex Incorporated. In consumer discretionary entertainment, we see Ammo Incorporated and Inspired Entertainment Incorporated. Take Ammo Incorporated for instance. It's listed with a value of $5,920,000. This is where the fund is putting a significant portion of its capital in this particular company. Similarly, Inspired Entertainment has a value of $6,566,000. And remember that top holding, the Real. Its value here is listed as $13,826,419, making it a substantial investment. The total value of common stocks held is a massive $94,504,752. The cost for these investments was $78,777,110. This difference shows the unrealized gain over the cost. Interestingly, the fund also invests in closed-end mutual funds, making up 5.92% of its assets. This means the fund managers are not only picking individual stocks, but also investing in other funds that are themselves professionally managed. Then there are the debt securities, accounting for 11.08%. This category includes various bonds, like those from Allstate Corporation, Bank of Montreal, and Citigroup Global Markets. These are generally considered less risky than stocks, but also offer lower potential returns. For example, the Allstate Corp bond has a face value of $1 million and a market value of $1,053,604. This slight premium indicates the market sees this bond as having good value. The Bank of Montreal bond has a higher interest rate, which is attractive in the current market. A small portion, 0.94%, is in a money market fund, which is essentially holding cash in very safe, short-term investments. Looking at the overall financial picture, the statement of assets and liabilities as of the 30th of September 2025 shows total assets of over $116 million. Liabilities are relatively small, just over $158,000. This means most of the fund's value is actual investments. The net assets are broken down into paid in capital and distributable earnings. The paid in capital is over $92 million and the undistributed earnings are over $23 million. The net asset value per S-share stands at $11.68. Now let's see how the fund performed operationally for the 6 months ending the 30th of September 2025. Total investment income, primarily from dividends and interest, was $926,279. However, expenses are a significant factor. Investment advisory fees alone were $502,677. Other expenses like record keeping, accounting, and transfer agent fees add up. The net expenses after some fee waivers and recoveries were $746,951. This results in a net investment income of $179,328 for the period. The real story in terms of profit comes from the gains on investments. The net realized gain was around $4,930, but the big number is the net change in unrealized appreciation, which is a staggering $20,790,541. This means the value of the investments went up significantly on paper. When you combine everything, the increase in net assets from operations for this 6-month period is over $20.9 million. That's a solid gain. When we look at the statements of changes in net assets, we see that for the 6 months ending the 30th of September 2025, the fund experienced a significant increase in net assets of over $20.3 million. This is largely driven by that strong performance in investment gains. The financial highlights give us a per share view. The net asset value per S-share at the beginning of the period was $9.57, and it ended at $11.68. That's a substantial jump. The total return for this period was 22.04%. That's a very strong showing for a 6-month span. Compared to previous years, this period stands out. For example, the year ended the 31st of March 2025 saw a total return of 8.71%. The expense ratios are also important. The net expenses after waivers were 1.50% for this period. This aligns with their goal to keep operating expenses at that level. Drilling down into the notes, we learn that this fund is part of the World Fund's trust and aims for current income and long-term growth. Their investment objective is clear. The way they value their investments is standard practice, using market prices when available and fair value for others. They use a 3-tier hierarchy for fair value measurements. Most of their assets fall into level 1, meaning they are valued using quoted prices in active markets for identical securities. This is generally a good sign, indicating transparency and reliable pricing. This section details the fees paid to the investment advisor. The annual fee is 1.00% of net assets. They also have an expense limitation agreement, capping total annual operating expenses at 1.50%. Interestingly, the advisor has waived some fees and they are eligible to recoup these in the future. For the 6 months ending the 30th of September 2025, the advisor earned over $500,000 in advisory fees and recouped over $31,000 in previously waived fees. Looking at distributions, it appears there were no distributions paid out for the 6 months ending the 30th of September 2025. However, the previous year saw distributions of $1,821,000. The fund's retained earnings are substantial, over $23 million on a tax basis. A key risk highlighted is sector risk. The fund notes that if it has significant investments in a particular sector, developments affecting that sector can have a greater impact. Specifically, they point out that as of the 30th of September 2025, 31.47% of their net assets were invested in the consumer discretionary retail sector. This means any downturn in this specific sector could significantly affect the fund's performance. Finally, the report cautions investors that the fund's value will fluctuate and you could lose money. It is not guaranteed to meet its objective and is not insured by any government agency. This is standard investor disclosure, but it always bears repeating. So, what's the verdict? The Philotimo Focused Growth and Income Fund had a very strong 6-month period leading up to the 30th of September 2025, driven by significant unrealized gains in its investments. The total return of over 22% is impressive. However, investors should be mindful of the sector concentration, particularly in consumer discretionary retail, and the overall expense ratio of 1.50%. While the advisor has shown a willingness to waive fees, the underlying costs remain a factor. The fund's strategy seems to be working well in this reporting period, but diversification and the inherent risks of the market will always play a big role. A significant portion of their gains came from the appreciation of their holdings, which is great when it happens, but there is always the possibility of a correction. Alright, that is our deep dive into the Philotimo Focused Growth and Income Fund's latest report. What do you think about their investment strategy and those impressive gains? Let us know your thoughts in the comments below. If you found this breakdown useful, please give this video a thumbs up and subscribe for more corporate financial insights. And don't forget to join our Discord community for more in-depth discussions. The link is in the description. Thanks for watching, and we will see you next time on Corporate Decoder.